Welcome to Furniture Industry News, the podcast that keeps professionals in the furniture industry up to speed with the latest developments. In this episode, we'll delve into a range of key topics currently shaping the landscape of the furniture world. As economic challenges persist, we'll examine the sales woes faced by a significant portion of the top 100 furniture retailers in 2023 and touch upon the few bright spots in specialty retail. We'll also explore the recent uptick in the Consumer Confidence Index, which signals a slight improvement in the public's outlook on the economy, albeit with caution still being the order of the day. Insights from the International Council of Shopping Centers convention will offer a deeper understanding of the critical takeaways for furniture retailers navigating a competitive retail space environment. Moreover, we'll discuss the resurgence in mergers and acquisitions within the home furnishings industry as companies seek to solidify their market positions. Meanwhile, recent extensions on tariff exclusions for Chinese textiles may provide a much-needed breather for manufacturers and retailers. For those eyeing outdoor space enhancements, we'll highlight why 82% of consumers underutilize their outdoor living areas and what's on their wish lists for improvements. In the bedroom category, learn how specific value additions are helping manufacturers and retailers weather the economic storm. Lastly, we'll cover Ethan Allen's expansion plans in New Jersey as they continue to grow, despite a challenging retail environment. Stay tuned as we unpack these stories to help you stay ahead in the evolving world of furniture retail. Thank you for joining us on Furniture Industry News. The majority of the top 100 furniture retailers faced significant challenges in 2023. High consumer inflation, elevated interest rates, and a sluggish housing market heavily impacted sales. Consumers diverted their discretionary spending from furniture, bedding, and accessories to travel, entertainment, and personal care. The combined sales for these top retailers came in at $56.1 billion, marking a 7.4% decline from 2022's total of $60.6 billion and an 8.2% drop from 2021's figures. The industry also saw a slight decrease in the number of storefronts, down by 72 units, marking a 0.6% decline. Adding to the woes, there were no carryover sales from previous years, a factor that had helped prop up 2022 sales. The conventional furniture sector was particularly hard hit, experiencing an 8.8% decline in sales, while specialty stores saw a smaller but still significant drop of 5.9%. Among the few retailers that bucked the trend, specialty stores such as Crate and Barrel, which saw an 11.2% increase in sales, and Lovesac, with a 7.5% rise, managed to showcase positive growth. Ikea also did well, with a 6% gain, and Arhaus experienced a 4.8% boost. Some conventional retailers saw gains too. Clive Daniel Home topped the list with a 16.5% increase, followed by Conn's, which saw a 14.6% rise, largely due to its acquisition of Badcock's furniture stores. Crate and Barrel made a significant move up to the number 7 spot in the top 10 list, bolstered by its double-digit growth. Meanwhile, Ashley maintained its number 1 position, but saw a 2.5% decline in sales, bringing its total below the $6 billion mark. Other notable performers within the top 10 included Ikea and Crate and Barrel, the only companies to show sales gains in 2023. Some retailers, however, took a hit. Big Lots dropped significantly, from a high of number 8 a few years ago to number 16, driven by a 15.1% decline in sales. Bassett Home Furnishings also faced setbacks, falling from number 32 to 39. On a positive note, the top 100 list welcomed 4 new retailers: Canales Furniture from Texas, The Furniture Warehouse, Richmond Sales from Florida, Kittle's Furniture from Indianapolis, and Talsma Furniture from Michigan. Overall, the general sentiment within the industry remains challenging. However, the gains witnessed by a select few retailers provide a glimmer of hope and underline the importance of strategic moves and niche markets in this evolving landscape. In our next segment, we turn our attention to the Consumer Confidence Index, which recently saw a slight improvement. After experiencing a dip in April, the index rebounded in May, rising to 102.0 from a slightly revised figure of 97.5. While this uptick is a positive sign, it's important to note that the expectations index remains below levels that typically signal a robust economic outlook. The expectations index, which reflects consumers' short-term outlook on income, business, and labor market conditions, increased to 74.6 from 68.8. However, it still falls below the recession threshold of 80. Dana M. Peterson, chief economist at the Conference Board, emphasized that while confidence improved in May after 3 consecutive months of decline, the overall gauge has remained within a relatively narrow range for more than 2 years. In parallel, the Present Situation Index, which is based on consumers' assessment of current business and labor market conditions, also saw a minor rise. This index climbed to 143.1, up from April's 140.6. According to Peterson, the strong labor market continues to bolster consumers' overall assessment of the present situation. She noted that views on current labor market conditions brightened in May, as fewer respondents reported that jobs were hard to get. Digging deeper into the numbers, we see that 20.3% of consumers described business conditions as good, a slight decline from 20.8% in April. On the other hand, 17.6% maintained that business conditions were bad, unchanged from the previous month. Notably, a smaller percentage of consumers, 13.5%, felt that jobs were hard to get, a reduction from April's 15.5%. Looking ahead, consumers appeared slightly less pessimistic about the short-term business outlook in May. The percentage of consumers expecting business conditions to improve held steady at 13.3%, while those anticipating a deterioration fell to 16.8% from 19.1%. Moreover, consumers' expectations for more job availability in the future improved marginally to 12.6%. On the personal front, the outlook for short-term income prospects saw minor gains. Those expecting their incomes to increase rose to 16.9%, up from 16.8% in April, while those anticipating a decrease in income dropped to 11%. Overall, while the Consumer Confidence Index shows slight improvements, the continued cautious outlook indicates that uncertainty remains in the air. This mixed sentiment could have implications for spending patterns and economic activities in the near term. Retail experts recently shared some key insights at the International Council of Shopping Centers convention in Las Vegas. The gathering, which attracted about 25,000 retail professionals, was a hub for deal-making, trend exploration, and networking. Among the standout points was the observation regarding the shortage of desirable retail space, a key issue facing the industry. Contrary to concerns over excess vacant space, the current challenge is the high demand for retail space, which far exceeds supply. Much of the new construction has already been pre-leased, making it difficult for new tenants to find desirable locations. As a result, the value of retail real estate is on the rise, creating a competitive leasing environment that favors landlords. Interestingly, the tight retail space conditions are expected to persist due to declining construction starts. Tenants are more likely to hold on to their existing spaces, further limiting availability. This has driven up the value of retail real estate even more, benefiting current property owners. Another significant insight from the convention was that higher wages are anticipated to support consumer spending throughout 2024. This is expected to slightly outpace the growth seen in the previous year, offering a silver lining for the retail sector, including furniture retailers. Retail leasing demand has been increasing in segments like food services, discount retailers, fitness centers, grocery stores, and healthcare facilities. These segments account for nearly 60% of new leasing activity, leading food services at 19%. However, grocery stores, fitness centers, and furniture stores have seen declines in leasing activity, indicating a shift in tenant composition. The panelists also noted that the end of easy financing and a decline in venture funding have forced retail brands to prioritize profitability over aggressive expansion. Brands are now focusing more on balancing digital and physical growth. The retail sector has also seen changes in the financing market. Although interest rates have impacted consumer behavior, luxury retail thrives while middle to lower income spending decreases. Despite this, off-price retailers have benefited from inflation. While there is ample investor demand and abundant capital, the volatility in capital markets has created a bid-ask spread impasse. Owners of high-performing assets are in no hurry to sell unless they achieve the desired pricing. At the same time, the demand for quality retail assets remains high. Successful financing deals now require best-in-class sponsorship, as lenders prefer operators with strong tenant relationships and extensive experience. Deals must be well-planned and executed. In summary, while the retail environment poses challenges, the overall trend for retail sales growth remains favorable. Furniture retailers with strong balance sheets and disciplined cost controls can look forward to a hopeful future, thanks to the positive market dynamics discussed at the convention. At the recent betting conference in Hilton Head, panelists shared intriguing insights into the current wave of mergers and acquisitions sweeping the home furnishings industry. According to experts Darlene Leonard, Stuart Mullins-Stump, and Mike Watson, the industry is experiencing a resurgence in M&A activity, a stark contrast to the past few years marred by economic disruptions and risk aversion. The primary driver behind this renewed activity is a strategic focus on vertical integrations. Companies are aiming to gain greater control over various aspects of their operations rather than merely expanding their market reach. This strategic shift is evident in notable deals like Tempur Sealy's bid to acquire Mattress Firm and Ashley's acquisition of direct-to-consumer specialist Resident. The goal is clear: build a robust, vertically integrated business model to weather market fluctuations and sharpen competitive edges. However, navigating these deals is not straightforward. Higher interest rates and stringent banking requirements mean that sellers are increasingly accepting seller notes or earn-out structures to achieve their desired valuations. This trend highlights a shift towards more calculated and strategic acquisitions, where the financial structuring of deals becomes as crucial as the operational benefits. Moreover, private equity firms, although currently less active, are anticipated to re-enter the scene soon. With a crop of PE firms nearing their exit timelines, the influx of new private equity investments is on the horizon. This potential influx could further stimulate M&A activities, offering companies additional resources to execute strategic acquisitions. For those eyeing a sale, the expert advice is clear: preparation is key. Establishing a well-defined company valuation, developing a robust management team, and updating operational systems can create an attractive basis for potential acquirers. In this dynamic environment, well-prepared companies stand a better chance of navigating the acquisition landscape successfully. In summary, the current wave of mergers and acquisitions in the home furnishings industry reflects a strategic pivot towards vertical integration. This approach not only promises to strengthen market positions, but also sets the stage for a more resilient industry landscape. Just days before they were set to expire, the Office of the U.S. Trade Representative extended tariff exclusions on several categories of home textiles manufactured in China. These exclusions will now remain in effect until May 31st, 2025. This extension serves as a significant, albeit temporary, relief for manufacturers and retailers who have been grappling with the implications of trade tariffs. Among the products benefiting from this extension are feather down and pillow shells filled with goose or duck down, protective cotton encasements for pillows, certain lotion dispensers, certain silk fabrics, and specific long pile knit fabrics. This move ensures that these items will continue to be imported without the additional financial burden that tariffs often impose. However, it's important to note that the news isn't universally positive. Not all home textile products made in China have received renewed exclusions. Certain woven fabrics and yarns, for example, will see their exclusions expire on June 14th. This selective approach underscores the complex nature of trade relations and the balancing act required to protect domestic industries while maintaining essential supply chains. As businesses navigate these changes, they must stay vigilant and adapt to ensure their competitiveness in a fluctuating market. The extension provides a window of opportunity for strategic planning and adjustments, allowing companies time to develop longer-term solutions for sourcing and manufacturing. Despite the pandemic-driven focus on outdoor living, it's clear that many consumers still aren't fully utilizing their outdoor spaces. According to a new report by the International Casual Furnishings Association, a striking 82% of consumers are underutilizing their outdoor living areas. This underutilization comes at a time when more people than ever have been investing in their patios, decks, and backyards. The study, conducted by Wakefield Research, reveals that only 18% of consumers are spending as much time in their outdoor spaces as they wish. There's significant interest in enhancing these areas, with 94% of respondents indicating they would spend more time relaxing, eating, socializing, and entertaining outdoors if their spaces were updated. The items most desired by consumers for these upgrades include furniture, lighting, and accent pieces. New trends are also emerging. For instance, 23% of consumers now express interest in outdoor art. Backyard enhancements are not just about aesthetics. They also serve practical needs. Items such as comfortable lounge chairs, dining sets, and adequate shading solutions like umbrellas are highly sought after. These additions help create inviting and functional spaces where individuals can enjoy their surroundings. Jackie Hirschhout, Vice President of the American Home Furnishings Alliance and Executive Director of its outdoor division, highlighted the importance of comfortable and inviting outdoor spaces. She noted that there are ample furnishings and accessories available for all budgets and space sizes to help people make the most of their outdoor areas. The report also identifies key trends for 2024. Consumers are showing increased interest in outdoor kitchens, eco-conscious designs, modular furniture, and enhanced lighting solutions like torches and lanterns. These trends indicate a shift towards more dynamic and multifunctional outdoor living spaces. In conclusion, while there's still room for improvement in how consumers are utilizing their outdoor areas, the desire and market potential for upgrading these spaces remains strong. With the right investments in furniture, lighting, and decorative accents, outdoor living can become an even more integral part of the home experience. The bedroom furniture category has been facing significant challenges in recent times. Like many sectors within the furniture industry, it experienced a boom during the pandemic as people focused on making their homes more comfortable and functional. However, this surge was followed by a notable decline as consumer spending retrenched, exacerbated by high interest rates and an expensive housing market. One commonly held perception is that consumers, when tight on budgets, will defer bedroom furniture upgrades in favor of categories like upholstery or dining, which are more visible and prone to wear. Indeed, the conventional wisdom holds true. The bedroom category has been slower compared to other sectors over the past 12 months. Despite this, some manufacturers and retailers are leveraging innovative strategies to maintain their foothold in the market. For example, lower-end, more promotional companies are offering value-added features to entice consumers. Companies like Elements International are integrating features such as hidden drawers, lighting, Bluetooth speakers, and fingerprint locking capabilities into their products. This approach not only appeals to consumers looking for multifunctional furniture, but also helps justify higher price points despite economic constraints. Promotional efforts and adaptive strategies are also playing a crucial role. Retailers are keen on producing trend-right products at competitive prices to draw customers into stores. Elements International's plan to introduce more trend-right products and maintain its focus on quality has helped it stay ahead despite a tough market. Similarly, Lifestyle Enterprises is emphasizing the importance of value in its promotional product offerings, aiming to meet consumer expectations for affordability and functionality amidst fierce competition. Even mid-range and solid wood suppliers like America are noting the critical importance of offering value. Companies are focusing on constructing well-built items laden with features such as storage capability and lighting, which resonate with value-conscious consumers. High-end players like Cheryl are facing challenges but see opportunities in the growing consumer demand for customization and unique designs. This trend towards individualized solutions is pushing manufacturers to innovate and offer more compelling and customizable products to attract buyers. The demand for bedroom furniture, especially for items like dressers, chests, and nightstands, remains steady, with some optimistic projections of growth in the coming years. According to forecasts, changes in lifestyles, such as the trend towards larger homes and more spacious bedrooms, are expected to fuel higher demand for quality bedroom furniture. In contrast, the luxury end of the market continues to focus on aesthetics and comfort, catering to diverse consumer preferences for different styles. from glamorous and elegant to modern and transitional designs. Smaller scales and multifunctional solutions are particularly appealing in urban settings where space is at a premium. In conclusion, while the bedroom furniture category has indeed faced a slowdown, strategic value additions, promotional efforts, and a focus on consumer-centric features are enabling some manufacturers and retailers to navigate these tumultuous times. By understanding and responding to consumer needs, the industry shows resilience, even in a tough economic climate. Ethan Allen, a prominent name among the top 100 furniture retailers in the U.S., is set to expand its presence in New Jersey by opening its 7th store in the state. The new showroom, located at Greenbrook Commons in Watchung, will occupy a 4,321 square foot space that was formerly a Chase Bank. This latest addition reflects Ethan Allen's ongoing commitment to growth and customer engagement, even amid a challenging retail landscape. The company already operates showrooms in Whippany, Somerville, Paramus, Marlton, Englishtown, and Princeton, demonstrating a strategic effort to cater to the diverse needs and preferences of New Jersey's consumers. Ethan Allen's proactive approach and continued investment in new locations signal the retailer's confidence in its brand strength and market demand. This expansion comes as part of their broader strategy to enhance customer experience and accessibility, aiming to provide their high-quality furniture and design services to a wider audience. Ranking 19th in Furniture Today's 2024 Top 100 list, Ethan Allen reported impressive sales of $811.5 million across 168 showrooms in 2023. This new store is expected to bolster their market presence further, reinforcing their status as a leading player in the furniture industry. Thank you for tuning into today's episode of Furniture Industry News. We appreciate you taking the time to stay informed about the latest developments affecting our industry. We strive to keep you up to date with the most relevant news and insights, aiding you in making informed decisions in your business. To recap, we discussed the notable challenges the top 100 furniture retailers faced in 2023, an update on the Consumer Confidence Index, and the key takeaways from the latest real estate convention. We also explored the resurgence of mergers and acquisitions within the industry, the extension of tariff exclusions on certain Chinese textiles, the underutilization of outdoor living spaces by consumers, the performance of bedroom furniture in tough economic times, and Ethan Allen's new expansion plans in New Jersey. Stay informed and ahead of the curve by subscribing to our podcast. We'll continue to bring you essential news and analysis tailored for professionals in the furniture industry. Until next time, keep innovating and thriving in the ever-evolving world of furniture. This has been Furniture Industry News, and we look forward to having you join us in our next episode for more in-depth coverage and insights. Thank you and goodbye for now.